Welcome back to EconVerse. Today, we're going to do a deep dive. Something you probably see every day, but maybe haven't thought about in this way. You know how the spending habits of the super rich can actually impact an entire economy?
Yeah, it's fascinating, isn't it? And it's not just like about luxury yachts and private jets, right? It's
Yeah.
about how the economic decisions of a small percentage of people, they can ripple outwards. It can actually shape the financial landscape for everyone.
Okay, so let's unpack this a little. We've got a stack of articles from sources like the Wall Street Journal, Fox Business, PBS, all pointing to a trend in the U.S. The richest households are spending more than ever, and it's having a pretty significant impact.
Yeah, and to really grasp the scale of this, we have to look at the data. Moody's Analytics, a leading economic research firm, they found that the top 10% of earners in the U.S., those making around $250,000 or more a year, are responsible for almost half of all consumer spending.
Wow, almost half. It's a huge chunk of the economy.
It really is, and it's a record high. Back in the early 1990s, that same group, they accounted for about 36%. So we're seeing a pretty dramatic shift in spending power.
So it's not just that they're spending more, it's that their share of overall spending is growing significantly.
Exactly. Exactly. To put that into perspective, Moody's estimates that this top 10% contributes at least 1/3 of the entire U.S. GDP.
Okay, so we've established that the wealthy are spending, a lot. But what's driving this trend? Why are they spending so much more now than in the past?
Well, one of the key factors is something called the wealth effect. Imagine this. Your house, it doubles in value. Or your stock portfolio skyrockets. Suddenly you feel a lot richer, right?
I can see that happening.
That's the wealth effect in action. When people's assets, they increase in value, they feel wealthier and more confident about spending money, even if their income hasn't actually changed.
So it's like a psychological boost that leads to more spending.
Precisely. And during the period, these articles are talking about, we saw a huge boom in asset prices, particularly for things like real estate and stocks, which disproportionately benefited the wealthy.
So while many people were feeling the squeeze of inflation, the wealthiest were seeing their net worth just soar, making them more likely to open their wallets.
Exactly. And we're not just talking about, everyday purchases. We're talking luxury travel, designer clothes, multiple homes, even private jets in some cases.
Our Wall Street Journal had some pretty eye-opening example of families spending tens of thousands of dollars on safaris or buying brand new airplanes. It really highlights the difference in spending power between the super rich and everyone else.
It does. And it's important to remember that while the wealthiest were enjoying this, like spending spree, middle and lower income households, they were often having to make tough choices. They were cutting back on things like dining out, entertainment, and vacations, things that can actually help stimulate economic growth.
So you've got the situation where the wealthy are driving a large chunk of economic activity while a significant portion of the population is struggling to keep up.
That's the situation. And it raises some important questions about the sustainability and fairness of this trend. What happens if this continues? What are the long-term implications of an economy that becomes so reliant on the spending habits of a small elite group?
It's almost like, we're seeing two different economies, one for the wealthy and one for everyone else.
Yeah, that's a really insightful observation. And it leads us to another crucial point raised by these articles, the potential for this trend to exacerbate economic inequality.
Because if the rich are getting richer and spending more, while everyone else is struggling to keep up, the gap between, the haves and the have-nots just keeps widening.
Exactly. And this growing inequality, it can have far-reaching consequences. Social unrest, political instability, even a decline in overall societal well-being.
So this isn't just an economic issue, it's a social issue as well.
Precisely. Now, let's shift gears a bit. Consider the risks associated with this heavy reliance on high earner spending. It might seem like a good thing on the surface, but, it actually makes the economy quite vulnerable.
Okay, I'm all ears. What kind of risks are we talking about?
Well, imagine what happens if there's a sudden economic downturn or a stock market crash.
Well, those high earners would likely tighten their belts.
Yeah.
And since they're responsible for such a significant portion of spending, the whole economy, it could take a hit.
Exactly. Exactly. It's like a domino effect. A downturn in one area, it can, trigger a chain reaction, leading to job losses, business closures, and a slowdown in economic activity.
And those who are already struggling financially would be hit the hardest.
Absolutely. They would have even less disposable income, making it even harder to, make ends meet. So this trend, it creates a kind of like economic fragility,
Hmm.
where the well-being of the many is tied to the spending habits of a few.
That's a sobering thought. It sounds like we need to be thinking about, solutions. How can we address this issue of growing inequality and economic vulnerability?
That's the million-dollar question, and it's a complex one. There's no easy fix, but these articles, they do hint at some potential policy responses.
Like what?
Well, things like progressive taxation, where those who earn more pay a higher percentage of their income in taxes.
That could help, redistribute wealth
Yeah,
and generate revenue for social programs.
exactly. Another idea is strengthening social safety nets, like unemployment insurance and food assistance programs. These can provide a crucial buffer for those who are struggling during economic downturns.
And investing in, education and job training, that could help equip people with the skills they need to succeed in a changing economy.
Right. The goal is to create a more resilient and equitable economy where everyone has the opportunity to thrive, not just those at the very top.
This has given me a lot to think about, but I want to go back to something we touched on earlier. The impact of this trend on, the retail landscape. You mentioned a kind of like economic Darwinism at play.
Yes. And this is where we see like the rubber really meet the road in terms of how these shifting spending patterns are playing out in the real world.
So we're seeing businesses that cater to the affluent. They're thriving. Luxury retailers, high-end travel agencies, even private jet companies. They're booming.
Well, those that target middle and lower income consumers, they're struggling. Think discount stores, family restaurants, those everyday places that are vital to a community.
Some are even having to close their doors permanently.
And that's a real problem because the growth of those luxury businesses doesn't necessarily offset the losses. A high-end boutique doesn't employ as many people as a large department store, for example.
So it's not just about shifting spending patterns. It's about a potential restructuring of the entire, retail ecosystem.
Right. And we need to consider the broader social and economic consequences of that shift. What happens to a community when it loses its affordable shopping options or its gathering places?
It creates a sense of like division,
Mhm.
almost like there are parallel universes existing side by side, one for the wealthy and one for everyone else.
And that can have a ripple effect on everything from job opportunities to, access to goods and services to the overall sense of community cohesion.
It makes you wonder if we're heading towards a future where there are like luxury enclaves for the rich and fewer options available for everyone else.
It's a valid concern, and it's one that policymakers and community leaders need to be thinking about. How do we ensure that essential goods and services remain accessible to all income levels, even as consumer spending becomes more concentrated?
That's a great question and one that will require some creative solutions.
Absolutely. We need to be thinking outside the box and finding ways to create a more inclusive and equitable economy, one where everyone has the opportunity to participate and thrive.
Well said. But before we wrap things up, I'm curious about something else these articles mention. The fact that this isn't just a U.S. phenomena.
You're right. This trend of rising wealth concentration and its impact on spending patterns, it's happening all over the world. It's a global issue with global implications.
So this is something that our EconVerse listeners, no matter where they are in the world, need to be aware of.
Absolutely. We're seeing similar trends in developed economies, like Canada, the UK, even China. As wealth becomes increasingly concentrated globally, we're seeing a similar pattern of high earners driving a larger share of consumer spending.
So it's not just about, what's happening in individual countries. It's about a global shift in economic power.
Exactly. And that raises some really big questions about, the future of capitalism and globalization. Can a system that relies so heavily on the spending of a wealthy few truly be sustainable in the long run? What are the implications for like global inequality and social stability?
Those are some heavy questions to ponder. It sounds like we've only just scratched the surface of this topic.
We have, and it's a topic that deserves much more attention and discussion. We need to be thinking critically about how these trends are, impacting our lives and our communities, and what we can do to shape a more equitable and sustainable future.
Well said. Now, as we wrap up this deep dive, I'm curious to hear like your final thoughts. What's the one key takeaway you want our EconVerse listeners to walk away with?
If I had to like boil it down to one key message, it would be this. We need to start having a serious conversation about, the kind of economy we want to create. Do we want a system where a small percentage of people hold like most of the economic power and their spending habits dictate the fate of, entire industries and communities?
Or do we want a system that's more inclusive and sustainable, where
Mm.
prosperity is more broadly shared and everyone has the opportunity to, participate and thrive?
Exactly. That's the fundamental question we need to be asking ourselves, and it's a question that requires input from everyone. Policymakers, business leaders, economists, even everyday citizens. And the first step is, understanding the forces at play, and engaging in these crucial conversations.
Well said. That wraps up our deep dive for today. We hope you found this exploration of wealth concentration and spending patterns insightful and thought-provoking. And we encourage you to continue the conversation in your own communities.
Remember, knowledge is power.
Yeah.
And the more we understand about these complex economic issues, the better equipped we'll be to create a more um, just and prosperous world for everyone.
Thanks for listening to EconVerse. We'll see you next time.